Bed Bath & Beyond defaults on $500 million of debt and signal that they won't be able to pay off their debt, that they might actually delist their stock and go completely bankrupt. What does this mean for AMC? As we know, Bed Bath & Beyond was another major runner over the past 2 years, and the charts look very similar to each other, that being AMC, Bed Bath & Beyond, and GME. So what kind of effect is this going to have on AMC, and what are the latest details that you need to know? We're going to get into that and much more here in this video. And something else that we need to talk about is the PCE report that will be coming out tomorrow. This is the Fed's preferred gauge of inflation, and I say tomorrow, it's going to come out on January 27th, just depending if you're watching this video at night or in the morning. That's where that verbiage comes from, guys. So we have a lot to talk about in a short amount of time. Let's get into it. Hit that like button and subscribe to the channel if you guys are with me here, if you feel me. And a lot of this information that we're going to talk about is not good for major banks, because guess who has the $500 million loan that Bed Bath & Beyond just defaulted on? Well, it's JP Morgan Chase, none other than JPM. So this is obviously not a good thing for parties involved with Bed Bath & Beyond. Their revenue has dropped 33% year over year and has dropped over 20% quarter over quarter. So this has been coming, and for any of the quote-unquote meme stocks, this one really does not come at a huge surprise. So it's pretty ironically surprising to me that JP Morgan has a $500 million loan out to Bed Bath & Beyond. Also, 6th Street Specialty Lending, TSLX is the ticker, also has a $375 million loan out to Bed Bath & Beyond. Shares did gap down on Thursday about 20%, bringing the meme stock's market cap to $300 million. The action triggered trading halts Thursday before the stock resumed trading. Earlier, the retail has warned that it risks a delisting. It did not file its quarterly earnings on the period ended November 26 on time as required by the NASDAQ exchange. Now, it does say the stock is trading below $3 per share and goes into some of the numbers. Like I said, a 33% decline in sales of $1.25 billion and a loss of $3.65 per share. That's just some astronomically high numbers there. So the future of Bed Bath & Beyond does not look promising, and this is really bad for big banks involved, which ultimately could be a very positive thing for AMC if AMC does have those positive earnings that we're going to talk about, that we've talked about for a while now as well. And positive earnings meaning the free cash flow or net profits. Those are the only two things that matters with AMC, because as of right now, we know the box office is going to be better in 2023. So if AMC is able to post a free cash flow number or net profits for Q4 2022, what's that going to mean for 2023? Well, it's probably going to be a lot better, and AMC can get away from this notion that meme stocks are going bankrupt. Obviously, Bed Bath & Beyond defaulting like this and going bankrupt, it doesn't set a good precedent. And until you are profitable or at least have free cash flows, this narrative is going to weigh heavily on momentum stocks. Now, on a positive note, for the trading day of Thursday, AMC stock was down 0.94% and was down 1.14% in after hours. And why I say this is a positive thing, because Bed Bath & Beyond dropped 20%, but investors are not acting like AMC is hand in hand with Bed Bath & Beyond, right? If there was a lot of concerns that AMC might actually go bankrupt as well, then you would be seeing a substantial sell-off in AMC's share price, in which you've seen quite the opposite. If we go ahead and take a look at what AMC has done over just the past couple of weeks now, since we did hit that bottom at $3.77, the stock is up about 40%, whereas Bed Bath & Beyond obviously went straight up and is coming straight back down. So on one hand, just to summarize all of this up for you guys, on one hand, you got JP Morgan You got other large institutions with hundreds of millions of dollars that they are not going to get back. Sure, you can take all the lotion you want or area rugs you want. It's not going to bring your $500 million loan back. So that instinctively could be a positive thing for AMC, especially since we know JP Morgan is a big part of the backing behind hedge funds to remain in these short positions. They have done their fair share of bailing out the hedge funds when things do get rough, so they are definitely going to bite the bullet on this one, and it might make them a little bit more hesitant to help out those hedge funds that are betting with or against potential momentum stocks. It can kind of, think about it like this, freeze up capital in this specific segment of the markets, which is retail momentum. It's like YOLOing your whole portfolio on some weekly options. If you lose all your money, you're probably not gonna do that one again. That's akin to the way that you can think about JP Morgan in this whole scenario. $500 million is a pretty sizable amount to lose in just one loan. So that's that information. As of right now, it does not look like that is directly affecting AMC stock, and I would go as far as to say it's not affecting AMC at this current moment, which is a positive thing, which means that investors are not looking at AMC heading into earnings that there's a chance of the company going bankrupt, in which there's obviously not. They're going to be hopefully free cash flow positive or have a net profit, and I think that's what could actually start the MOAS, guys. But another big portion of this video is about the data coming out tomorrow. So you are going to get personal income month over month for December. You're expecting that to come in at a positive 0.3%. Last month was a positive 0.4%. And all of this data does come out at 8:30 in the morning. So I don't want to be redundant and keep saying 8:30, 8:30, 8:30. It all comes out at 8:30 in the morning. You also have personal spending month over month for December. That is expected to drop by about 0.1% in negative territory. Last month's reading was a 0.1% positive gain. You also have core PC price index month over month for December as well coming out tomorrow. This is the big one, guys. This is the Fed's preferred gauge of inflation. If this thing plummets, you will see a very big day in the stock market, and that will give us room potentially to hear some more dovish commentary from Fed Jerome Powell. You are expecting a 0.1% increase for the month of December. In November, you've seen a 0.2% increase, so it would be going down like 50% month over month. On these month over month readings, those are the important ones. Now we are expecting core PCE year over year to come in at 4.6%, and that's again only down 0.1% from November's reading of 4.7%. You're also going to get pending home sales and the Michigan inflation expectations and the Michigan survey. You're going to get a lot of points right here. The inflation expectations, Michigan consumer expectations, Michigan current conditions. This is the final survey for January, so that can actually be very important to the markets as well. But long story short, PCE is going to be huge for the stock market tomorrow. Now, and granted, I want to give you guys my opinion on this, but I don't have a huge opinion. Granted, I do think inflation data has looked so well over the last couple of months. There's a chance you do just get that oddball reading that is higher than expectations, but the way inflation looks to be going down for months now, it seems like you're going to get a negative reading for the month of December, and that's going to be ultra positive. Now, as you guys do know, what happened today is we got the exchange reported short interest of free float for AMC stock, and that did officially hit a new record for all of 2022, coming in at 22.6% short interest. That is up 2.5% from the last reading, and the days to cover is up almost 1%, or one day essentially from the last reading, sitting at 4.76%. If we take a look, the amount of shares currently sold short sits at 117.64 million, up 300,000 shares on Thursday. Cost to bar rates at 277.75%. Cost to bar max 305%, and cost to borrow minimum at a cool 85%. Interactive Brokers has us at a 103% cost to borrow rate, guys. So I hope you guys learned something in this video, and really, I hope you got a better perspective of Bed Bath & Beyond to AMC, the correlation that really doesn't exist anymore. If it did exist, you would have seen a 5-10% drop in AMC. You did not see that. So I think you are breaking away from this all meme stocks are the same kind of deal here. And that's what could give us a huge bullish reaction on AMC earnings, guys. So if you did learn something, or you just like being here, you like meme stocks, you like the stock market, or you like to make some money, hit that like button and subscribe to the channel. That's a lot of likes right there. Nonetheless, you guys enjoy the rest of your day, and I will see you in the next one.